10 years on, the world remembers Lehman Brothers crash. Bat Airtel picks banks for London flotation of African business. Plus, Nigerian inflation rises 11.23% in August. Hello and welcome. It's the last trading day in the week. Thank you for joining us on Business Incorporated. I'm Chimezie Obi Iwa. Well, we'll begin with the latest data from the National Bureau of Statistics, which shows that Nigeria's headline inflation jumped by 0.09% to 11.23% in August, from 11.14% recorded in July year-on-year. The increase is coming for the first time after 18 months of consecutive disinflation. At the same time, the food index rose by 1.42% to 13.16%. The core sub-index rose by 0.78% to 10%, while urban inflation index surged by 1% to 11.67% last month. And to the markets now, the Nigerian stock market made a surprise reversal into the green at intraday, up 1.31%, bucking the negative trend. The JSE index was also up at 1.24%. Egypt is closed today for the weekend, and Kenya was down 1.57% on Thursday. And Middle East markets are closed today. However, on Thursday, Saudi Arabian stocks fell in a broad-based decline, missing out on a wider emerging markets rebound. The MSCI Emerging Market Index was up 0.9%, while the Saudi index slipped 0.5% in the first 45 minutes, with losers outnumbering gainers by 98 to 33. Our individual investors have been net sellers of Saudi stocks for most of the past several weeks, while institutions have become more cautious because of the instability in emerging markets and global trade tensions. In Qatar, the index was flat after closing on Wednesday at 16-month high. United Arab Emirates markets, that's Abu Dhabi and Dubai, were closed on Thursday for a public holiday. And in Europe, stocks were higher in early trade on Friday after an unexpectedly sharp interest rate hike in crisis hit Turkey, supported the lira and global risk appetite. It's also a weekend of 10 years of Lehman Brothers collapse that saw the global financial crisis. Well, Conrad Boson, my colleague in Frankfurt, has all the details of this memorial and what the outlook is like. Hello, Conrad. Good afternoon. Thank God it's Friday.
Hello, Jimmy. Yes, happy Friday to you too.
Right. This weekend, 10 years ago, the largest ever filing for bankruptcy protection in the U.S. happened, and that saw the collapse of Lehman Brothers. Let's do a bit of a look ahead with current trade wars, Brexit, cybercrime, and so on. Is the crisis over, or when do you see another crisis happening?
Well, that's of course the big question that everyone is discussing here 10 years after the Lehman collapse. What's on most of the traders' minds, of course, is Brexit, the trade wars. One thing I can tell you, the international political landscape at the moment is not the way it was 10 years ago, which means that also whatever the next crisis will be and the next shock on the markets will be coming from, the international political landscape is not so that it will be able to cope with the financial crisis the way it did last time. Populist governments here in Europe, the Brexiters in the UK, people like Donald Trump really probably are only able to bail out themselves and not an international financial system. This is a big concern for people on the markets, also given that the central banks are not able to deal with the crisis the same way they did last time. I mean, we have to take into consideration that the balance sheet of the European Central Bank is more than 4 trillion euros now as a consequence of the quantitative easing policies. There is not much more the European Central Bank can do. So this is one big concern. In terms of where the next crisis will be coming from, well, of course, the focus of everyone is on where the bubbles are. there is a bit of a discussion going on whether on the stock market, the equity markets, we're already seeing bubbles. We're definitely seeing a couple of bubbles on the real estate markets. I was in Switzerland recently, about a week ago, and people there have been building like hell. There are lots of new houses, lots of new apartment buildings, but lots of those apartment buildings are more or less empty. They don't find people to rent those chic apartments because there was too much building happening, and the prices, of course, for those real estate for this real estate are extremely high.